If I look a little more happy than usual, it's because I just met one of my personal heroes, Sir Terry Matthews. If you're new to the technology scene in Canada, the man on this stage next is probably the person you're going to want to learn about first. Sir Terry Matthews has either founded or funded more than 90 companies since 1972, including Newbridge Networks, a company he founded in 1986 and became a leader in the world's data networking industry. Today he's going to pull back the curtain for us and show us how we did it with a speech called How Passion, Motivation, and a Great Team Leads to Successful Businesses. Ladies and gentlemen, please welcome Sir Terry Matthews.
Now, how do I address a crowd like this? Probably all experts in your right, probably involved in high tech or whatever. And here I am. I live in Ottawa. I started my first company up in Ottawa. Probably the biggest risk I ever took, by the way, in 1972. With $4,000, I started up Untitled with a guy called Mike Copeland. I mean, $4,000 is not a lot of money. It wasn't even a lot of money in those days. But if you're only earning $11,000 a year, that's a pretty big percentage of your overall income. So it was the biggest risk I probably ever took. So here I was, 1972, wasn't even called Untitled then. But after 6 months of working with potential clients, talking about what their needs were, I learned some things that I still use to this day. I learned that you're better off to develop something where there's a client demand than to start by saying, well, I have this idea. I mean, ideas are 10 a penny in my view. What's important is what were revenues, what was the income, what were the sales, what's the growth. I mean, if you don't have a top line, unless you have some angel that's prepared to keep funding, you die on the vine. So I learned a couple of incredibly important things that has lasted through every company I've started, which is now over 100. And I've lost 6. No bankruptcies, but I go out of my way to make sure that I maintain good credibility, that if I bring in outside investors, that I honest to God believe it's on a winning streak. Otherwise, I do my best to just look after it myself, and I still behave that same way. But let's go all the way back 40 years ago. What did I learn that helped me get such a high proportion of successes? Some companies up at the level of billions of dollars, a lot in the hundreds of millions, and many in the tens of millions. And here I am. I currently have about 32 companies that are on the go, growing at the rate of about 4 a year, 4 new companies a year with new grads. So I continue to do that. Same things that I learned 40 years ago. And I'm as active as ever. In fact, I might even think that I'm more active than I was 40 years ago because I enjoy the business. That means when I could retire, when Untitled first went public in the late 70s, I could have gone to Florida. I could have twiddled my toes in the sand, but that would probably only last about 10 minutes before I'd get itchy to do something useful. So what did I learn? I learned that demand-driven. What does that mean? It means that whatever you develop, whether it's literature, whether it's hardware in those days or software today, what it means is you didn't waste energy, you didn't waste resources, because there's a client called a potential client telling you what to do. So every day, every hour that you do something, there's a target. You don't waste energies. And that's a fundamental item that I started up 40 years ago. And I don't find that very difficult to understand. Another thing that I did with that $4,000 is it lasted for 6 months, believe it or not, for 2 families. We literally worked around the clock. And perhaps through persuasion, I persuaded 3 other people to work with us for nothing. But I said I'd give you ownership. You see, there's another very important little characteristic. Is if somebody works and you pay them, well, it's netted out. They work, they got paid, it's netted out. What if they're owners? The chemistry's different. This is no longer work, get paid, and that's it. No, you see, it doesn't go away because you're now dealing with owners. So let's go back in time. The first 6 months, we ascribed a value in the shares of $1 a share. Not complicated. And I spent $4,000 starting up, and some business people in Toronto liked what we were doing. Some lawyers in Ottawa called Gowling and Henderson, very big law firm. Some friends talked about it in the law firm. They liked it. So what did we do? We borrowed $120,000 for working capital to start supplying the technology we developed. So we borrowed 120 grand. For every $1,000 invested, and believe me, there were some people that only put $1,000 in the company, you'd get a $1 share. 10 years later, every one of the $1 shares converted to $2.5 million. Nobody complained. The lawyers didn't complain. The business people in Toronto didn't complain. The people who worked for nothing around the clock, they didn't complain. $2.5 million per share. How can I be so certain of that? Because I never sold any shares. Through rounds, equity rounds, a public offering, clunk, 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 clunk. 10 years later, the company actually went from, at one point it was 58 US a share. Now it's true, we had a little bit of a rocky ride in 1983 because at the end of 82, ATT broke up the 23 bell companies into 7 regional bell companies. 1/3 of the company's business was with the bell companies because I won a tender, and all 23 companies liked the product, software-driven PBXs, boom, up it came. But by law, they could no longer buy customer premise equipment. Oh, geez. I mean, every contract, and I had a lot of them, on the back, the terms and conditions are subject to government and regulatory approval. Government approval was removed by a Justice Department settlement with ATT to break it all up. So I lost hundreds of millions of dollars in revenues that year. I mean, talk about bloodletting. Worst year of my life, I might add. The downsizing could not be fine-lined. It had to be done with an axe. Because, boom, with 2 months' notice, I lost 1/3 of the business. So I had one hell of a tough time. But okay, we go back to profitability by the first quarter of the following year, and the company survived, and of course it's still there to this day. So that was my learning experience where, for your purposes, I learned the importance of ownership through stock options or actual shares. I learned the importance of focus on client requirements, and I drove it very, very hard. And everybody likes it when there's a bandwagon going. Everybody wants to be on board. So you get a bandwagon going, and everybody has a great time, great camaraderie. And I learned a few other things that were incredibly important to my entire history of starting up tech companies. Quarterly reports. Now you might say, quarterly reports, like, why would a startup want quarterly reports? Well, if you plan to live a long time and you plan to get investors involved, there'll be quite a few investors in this room, I would suggest, interested in this story that I have. Why would quarterly reports be important? I mean, for a startup, here's the first quarterly report. It would say no revenues. And it might say who's been hired, and it might say who the target clients are, and so on. And then the next one will say about the work with those clients. No revenues, but we consume this cash, clunk, 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 clunk. Well, at some point in time, what if the company does well and an investor's interest is right there? Wouldn't the investor say, well, I need to do a little bit of due diligence? Would that be important? What a message you've got for those investors when you say, well, why don't you take these last 5 quarterly reports? Oh, you have quarterly reports. I mean, yeah, we put them together every quarter. Now, isn't that an interesting thing? Now there's due diligence. And what else was the message? Well, if you invest, there's another report coming next quarter and the quarter after. So there's a very important message. You're not afraid to report the zero revenues. You're not afraid to report what client activity there is or what R&D is being done and so on. And there's another incredibly important thing about technology. It grows very fast. And believe me, it was the same thing 40 years ago. So if you put in that first quarterly report or second quarterly report, or let's suppose you're a potential investor and the company putting that report together is not very good to understand that investors are not necessarily technical. So let's suppose in the first couple of paragraphs, the person writing the report says, well, we're really pleased that we've got the HTML5 interface and we're working with version 6 of the... What the hell is this? We're working with IPv6 and we got HTML5 in there and, you know, there's a brand new FUFU valve. What the hell is that? If that first couple of pages is full of acronyms, you are dead meat. Because technology moves very quick. And you never know who the investor might be. Auntie Jane, Uncle George died 2 years ago, left her $5 million. Auntie Jane likes reading the quarterly reports about our Johnny, who started a company up. He's doing very well, you know. He puts quarterly reports out all the time. I know, and he just hired that lawyer into the company. He's really doing well. And in his latest report, he's talking about raising money. You see, it's a bit like a TV serial. Once you begin reading it and you're updated every quarter, you look forward to the next one. Auntie Jane has no idea what IPv6 is. IP, that would be International Product, I'm not quite sure, but see, you're dead meat. That first page had better be so simple, your grandmother and Auntie Jane can read it. The 10th page might have acronyms and so on for those that are a bit technical. But those first couple of pages had better be easy to read, like a TV serial unfolding before you that are providing at a very high level. Sometimes investors are not technical, but they're not dumb. So that underlying track record of history, track record which provides due diligence and a story, absolutely vital. Ownership, not just salaries, absolutely vital. So I learned a lot in those first years with Mitel. Client requirements, make it client driven, not I have an idea and I'm going to fulfill it. I don't do that. That's how I got such high likelihood of success. And I continue to do it. Same sort of principles. So what else have I learned? Canadian grads are bloody good. I now do business all around the world. Germany, France, England, Turkey, China. My first joint venture in China was in 1980. Newbridge did business in all 33 provinces. I know a lot about China, have lots of relationships in China, growing at a ferocious rate. So I always think in my mind, whatever you do in high tech, you must sell in the United States, and you must sell in Europe, and you must sell in China. You must. That's basic global. You have to do that. So that's what I target. And what other things have I learned? That if you're very open to investors, things can go wrong as long as you report it and they understand. And if they think you're on track for a long-term gain, they'll stay in. It's into this regular quarterly reporting. So the other thing is good governance. What did I learn about that? Remember those lawyers that made investments in 1973? You see, that's part and parcel of good governance. So what do I look for today? You imagine, you're a startup company, it's only 2 years old, and you're dealing with a potential investor, and you say, well, look, here's due diligence, here's the last, 5, 6 quarterly reports, big message in that, and you find out, well, there's a board of directors. The chairman of the audit committee used to work at Deloitte's. You have a chairman of the audit committee? The company's only 2 years old. Somebody from Deloitte's or PwC or one of the big auditing companies, they cannot lie. It's embedded in the body. If the financials say something, because it must be right. Imagine what that conveys to an investor if it's a new company, but the chairman of the audit committee used to work at one of the big auditing firms. And who else is on the board? Somebody from a major law firm. Used to work there. In the major accounting firms, people retire at 62. The month after they retire, they're fed up of feeding the cat every day. They planted tomato plants, but they don't want to make the whole garden full of tomato plants. They re-insulated the roof and they repaved the drive, and now what next? They're twiddling thumbs. They don't want to go down to Florida for 12 months of the year. What do? You get people who would love to be involved. Well, I got news for you. What do auditors do in any city? For those of you that are knowledgeable about auditors, they work with the richest people in society. They work with the companies in society. So they know the companies, the boards of directors. They know the rich people. What an incredible network to bring for advice and mentorship to a young company. But it had better be done properly. It had better be not just a glass half full. What's the glass full of? Is it clean water with a clean glass? It had better be good. You don't want shitty stuff halfway up the glass. They can't get involved with that. So it had better be a clean structure. It had better be good quarterly reports. I know, okay, some people in here will say, Terry, that's obvious. Well, okay, you do it too then. Make sure you do create clean entities. Nobody wants to invest in a dirty entity. It's not for an investor. And what's the goals? What's the liquidity event? Who's the clients? See, quarterly reports. And how much research material on the sector that you're in can you throw into those quarterly reports to say, well, here's a report from Goldman Sachs, here's a report from JP Morgan, here's an analyst report out of Silicon Valley. Boom! Substance to say how big the market is. And what about the government? Like, can the government help? Ever heard of IRAP? If you have a clean company, they really like it if it's clean. They really like those quarterly reports. It gives comfort and focus to those entities that give grants. And believe me, do I ever take advantage of government programs. I'm a taxpayer. If there's an IRAP grant from NRC, I'm going to take it. I'm going to chew up every little bit and pig out as much as I can. And what about the trade offices? Now, here's an interesting thing. My sector is ICT. It's foundational. There'll be nobody in this room without a smartphone. There'll be nobody in this room without a PC. I don't care what sector you're in. It's as important as roads, airlines, airports. In fact, I'd even argue it's more important than that. If you can't communicate and use the tools, you're going to go out of business. It's foundational. And I have never, ever in my career seen so many opportunities. It's in every sector. What do I mean by that? For those of you that are knowledgeable about the federal or provincial governments, this year they begin the biggest technology refresh in the history of the government. Lisanne Ferrand, Deputy Minister for Shared Services in Ottawa. All of the government IT comes under one program, one leader. It's the biggest tech refresh the government has ever had. I am all over it because it's the biggest opportunity. How many knows that the same thing applies to the Ontario government? Yes, it does. How about the UK government, the French government, the German government, the Amsterdam government? They're all changing what they do in IT, and there's some very simple high-level things to think about. storage, processing power, size of networks. Power's a good one. A big company like Barclays Bank, you'll say, Terry, why are you talking about Barclays Bank? The UK government says you must reduce the power you consume in your data centers by 50%. Good God. On the one hand, they have to reduce the power. On the other hand, every single department is asking for more applications. They have no choice but to do a tech refresh. They have no choice but to use cloud infrastructure. They have no choice but to reduce the power that they're using, because by law, there'll be penalties. That's good for Canada, by the way. The biggest IT consumer on the planet is the US government and the US generally. They're also under pressure to reduce power. Air conditioning for those data centers. Where would the average temperature be lowest? Like, would Alberta come to mind? Would Northern Ontario come to mind? Yes, it would. So watch Canada become, for whatever reason, very important to reduce power. Very important for the data centers. You watch it. And then you might say, well, Terry, like, I'm not sure people in New York would use a data center in Northern Ontario. Well, you see, if you look at the optical bandwidth, it's gone up by the thousands to one in the last few years. So the pipes, with no extra cost, have become monsters. You can have all the processing and memory and stuff way north, totally available in a city the size of New York. And the average consumption of power in air conditioning will be as low as you could possibly make it. What about China? Where's all of the data centers in China going? To Harbin. Harbin is the most northerly city. It's part of Siberia. Why are they doing it up there? Because it's so cold. You don't need air conditioning for most of the year. So there's some things at a very, very high level that you ought to think about if you're in the high-tech business. And there's some things at a very high level that you should take into consideration. So why am I telling you these things? And I could tell you a lot of other things. Let's now talk, stay up at the high level. How many people look at the stats? Throughout 2013, it was bad for high tech from a Canada perspective. The amount imported compared to exported, the difference was over $1 billion a month. We've had 4 years in the tech sector where the decline in exports is 30% down over the last 4 years. Why should I tell you that? I thought I was up here to tell you, to make you feel good about the tech industry. Why would I even bother to address you if it's depressing? Timing in life is almost everything. If you were king, what would you do if a sector that is this important, as important as roads, airlines, I might even say more important, if it was going down, what would you do about it? What would you do? Would you introduce some programs to improve it? So what have we seen in the last couple of years? More money for IRAP, direct grants to industry. IRAP's very good because they identify the winners, and the government says, oh, I like that program. Boom, I'll give you a grant to help that program out. VCAP, Venture Capital Action Plan. $500 million. $100 million goes to BDC, $400 million in a great big pot that's going to be allocated and used as a lever to get other people to put money in it. Big money. Lever it. Because 90% of the government's part will be the first spent. It says $400 million, $360 million will be the first lot out of the combined pot to go into the ventures. And any returns reduce what the other guys are going to put in. So I'm participating in it because normally I like investing in my own things. But it's a pretty good deal. I like it. So I'm behind it. So if there was a king, the king says, well, like it's like it's gone down far enough. I think we should tweak it here, tweak it there, optimize it, bring it back. I think 2014 is going to be a really good year for high tech. That's what I'm here to tell you. Now, I start up about 4 new companies a year. I hire Canadian grads who are really good. I don't necessarily hire the ones that have the highest marks. I hire the ones that I think put together a good team. And I guide them by what's in demand, not because somebody says, I have this great idea. Bullshit. I don't buy that. What's the client demand? Show me the client. And if this client says there's a good demand for that, then there'll be another one as well. Been there, done it for 40 years. We just have very good grads. We have lots of incubators. Mars was not there 10 years ago. Now you got lots of young people working in Mars, lots of people doing similar things from St. John's, Halifax, Vancouver, Victoria. Every city has incubators and accelerators. Every city has these young companies looking for funding from the government, which is increasing as we speak. And the government's on it. I kind of like that. I'd like to see the government do more. Don't get me wrong. Don't get me wrong. I'd love to see more. But at least before you find anything like that, let's make sure we recognize what's got to be done. So this will be a good year. And why am I down here making myself public like this? Because I like this Cantech. It might be the first one, but I like it. It's on target. I'm here to address the audience because I think 2014 is going to be damn good. Now, on my own little basket, I've got a company called Wesley Clover. For some strange reason, back in 1972, the $4,000 investment I made, which some people will think is a joke, no joke for me when I was earning 11 grand a year. For some strange reason, I set up a little company called Wesley Clover, and I made the investment through this little umbrella company. It's still small. I mean, there was nobody in it except me before, but, you know, there's still only 30 people in it. And what am I investing energies into? Well, roughly 50% of what I do is like development, like real estate development, you might call it. So, for instance, 1980, I bought a manor house in the UK. It's now called the Celtic Manor. And I have to move very quickly here. But it is the #1 hotel in the UK. It's the #1 golf destination Europe-wide. It's hosting the NATO summit in August of next year. That means 50 of the top political leaders, Obama, Harper, Hollande, and bump, 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 bump. So it's doing very well, thanks a lot. It brings me in just that one entity, about £1 million a week. So yes, it is a new suit. I'm glad you noticed it. So real estate, offices, golf courses, like that's sort of fun stuff. But it isn't anything like as much fun as starting up companies with young grads. And I leave you with this thought. If we don't all get behind young people and make them the next industry leaders, we don't have a future. And I will not have my grandchildren at a cash desk at Walmart. I want them to have a good future with good jobs. And that should be all of our concern. Thank you very much.